I now hand the conference over to Mr. Aniruddha Joshi from ICICI Securities. Thank you, and over to you, Mr. Joshi.
Yeah, thanks, Margaret. On behalf of ICICI Securities, we welcome you all to Q2FY21 results conference call of Kansai Nerolac. We have with us today Mr. Anuj Jain, Executive Director, Mr. Prashant Pai, Director Finance, and Mr. Jason Gonsalves, Director Corporate Planning, IT and Materials. From the results, we can clearly see the recovery in the paint demand for Kansai. With opening up of the economy, there will be likely further recovery as well as growth in automotive and industrial paints. We also expect to see growth in new ventures, that is putty, adhesive and waterproofing. With this, now I hand over the call to the management for their initial comments, and then we will open the floor for Q&A. Thanks, and over to you, sir.
Thank you, Anirudh. So good morning, everyone. Welcome you all to this Kansai Nerolac investor call for Q2 of 2020-21. Our best wishes to you and your family for Diwali in advance. This quarter, second quarter of 2021 has been better. If I talk about the decorative, we recorded a volume growth of approximately 15% in the Q2. Demand was better in rural and small town, but in addition, Tier 1 also witnessed gradual recovery. Some of the key highlights for us in decorative in the Q2 was that emulsions started growing well. We expanded our range of construction chemicals in Nerolac network, introduced 4 or 5 new products. Also, we were happy to introduce India's first antiviral Excel virus guard, which is based on Shikoi Japanese technology. We call it a magic product because it actually takes care of all kind of viruses, whether it's envelope virus or non-envelope virus. And in addition to antivirus properties, it has antibacterial properties. It can reduce humidity inside the house. It also absorbs the smell. So it's a multi-purpose. It's a very good product. We also expanded our distribution in the second quarter, and that also came on track. Our focus in decorative continued on distribution expansion, introduction of new products, new segments like construction chemicals and adhesives. Coming to industrial segments, automotive in the month of July, August together it was negative, but recovery was seen in the month of September. And if we go as per the CM report, passenger vehicle overall for the quarter was negative by around 4%, two-wheelers were negative by 6%, and commercial vehicles were negative by 17%. But in September there was a recovery, and the recovery was led by passenger vehicles growth. September was a good growth for passenger vehicles, followed by two-wheelers. There was no growth in commercial vehicles. Even other industrial businesses, powder coating, high performance coating, general industrial, they started picking up from the month of September. But overall, as I said, the quarter for industrial performance was negative. Our focus on industrial continued on new businesses. We have been going quite aggressive in obtaining the new businesses. Some of the niche segments like functional powders, high performance coatings, and also our focus has been in terms of increasing share in some of our existing accounts. Coming to subsidiaries, Marpol, because Marpol is a powder coating business, and that business also started picking up from the month of September. Pharma construction chemicals, that also business here started seeing recovery from the month of September, because that business is also more on the project business and the metro-based business. So from September we saw some recovery. In the adhesive business, still the Q2 was low because 44% almost business comes from industrial, and in the industrial, as I said, the recovery was started from September. So in adhesives, we still had some low growth in this quarter. For international subsidiaries, if you look at Nepal was the most impacted in the sense that the lockdown in the Q1 and even in the Q2, the lockdown continued. So Nepal continued to be impacted in terms of top line performance. Bangladesh did well. The Q1 there was a lockdown, but in Q2, after the unlock, things started. Bangladesh did well in Q2, and Sri Lanka is still under pressure. Some of the other things related to quarter two, we continued our working actions on cost reduction and judicious overhead management, and that worked for us. In terms of our brand campaign, we continued campaign on Aaj Careful to Kal Colorful. That was the tagline after we adopted the new positioning of colors. That we also introduced this antiviral paint campaign on multimedia, TV, digital, which I'm sure some of you would have seen. In our factories and offices, we continued with all precautions and guidelines. All kind of guidelines we followed in our factories and offices. And our capacity utilization in the quarter two went up as the demand has gone up. Coming to financials for the quarter two, our overall growth in net revenue was 3.6% over the corresponding quarter of the previous year. And EBITDA had a growth of 21.8% over quarter two of last year. It is up by 300 basis points. And PBT also, before exceptional item, there was a growth of 22.8% over quarter two of 1920. Looking forward, we are positive about season demand. If we compare with what we were talking in the last quarter, there is a positivity around. One reason because Diwali is in the month of November, and therefore there is a longer period available before Diwali. Also, we have seen some recovery in September, October in the automotive demand. In terms of raw material prices, they started firming up now, and despite that the crude was at a level, but the prices are firming up now, and we have to wait and watch that how it goes, as it's a function of demand and supply. Our area of focus will continue to be in terms of new segments, new products, and digitalization and the cost optimization. So this is a brief commentary from my side for the quarter two, and I invite the questions now.
Thank you very much. We will now begin the question and answer session. Anyone who would like to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. The first question is from the line of Avi Mehta from Macquarie. Please go ahead.
Hi, sir. Thanks for taking the question. Sir, I just wanted to understand that while emulsions have picked up from 1Q levels, as we go forward, do you expect growth rate to be driven primarily by the value segment in emulsions as well?
So actually the growth, going forward, we foresee that the growth will be from across all the segments. Why I said that emulsions have picked up, because when the unlock process started, we saw that market picked up the demand of the product like enamel, putty, ancillaries product. And for the mainline product like emulsion, the growth was lower. But as we moved from the quarter one to the quarter two, month-on-month basis, we are seeing a recovery in the emulsions. And we feel that if the situation continues like this, I think that even in the emulsion, and emulsion also has 3 categories: premium, popular, and economy. And even now, when we say that the growth has picked up, it has picked up in more popular emulsions and the economy emulsion. In the premium emulsions also there is a recovery, but there is a scope of further recovery, which we feel that now it is coming to the normal level, and it will come in line with as it used to be earlier.
Okay. Sir, where I was coming from is, do you see an economic impact or in some sense movement of the consumer towards a more value or popular segment, even in the water waste category, is where I was trying to,
No, actually we are not seeing that trend, because generally what happens is, this is what I was trying to say, that, the fact that emulsions have started going well, we are not seeing that there is a down trading happening. It is, that's what I was trying to say, that I think the earlier levels are coming back, and we are not seeing any trend that where people are down trading.
Okay, sir. My second question, sir, is, Marpol's performance suggests that powder coating also has done, demand has actually improved. I wanted to understand, which segment in the industrial is witnessing weakness other than autos, or is it largely auto which is the case?
So one is for the past quarter, one was the auto. The other is, high performance coating, which is related to infrastructure, because a lot of capex, that the companies have put on stall. So that was another business where we saw some kind of weakness.
And sir, powder has picked up, auto has picked up, high performance continues to see weakness. Is that what is the case, sir?
So month on month basis there is a recovery, but relative basis, yes, there was a weakness.
Okay. And sir, lastly, a bookkeeping question, CapEx. Sir, any, how should we look at this year, given that first half has been a fairly, conservative, CapEx number?
Prashant, would you like to answer this?
Yeah, I'll answer. See, our capex plan is about 150 to 175 crores. I think we should be on track on that. So in that range, this includes maintenance capex about 60-70 crores as well.
Okay. Okay. I'll come back in with you for the other questions. Thank you very much, sir.
Thank you. The next question is from the line of Percy Panthaki from IIFL. Please go ahead.
Hi, sir. Good morning, sir. Congrats on a good set of numbers. My first question is on the decorative paint segment. In the press release, you have mentioned that there is a good double-digit volume growth there. So two sub-questions within that. Firstly, how much is the gap between the volume growth and the value growth? The market leader has reported sort of value growth which is 500, 600 basis points below volume growth. So would the same be true for you as well? And if so, is it led by discounting or actual price cuts? And second sub-question here is that can you break up this double-digit volume growth for me in terms of some flavor on how the large towns, small towns, and rural is doing?
Okay. So, as I said, in decorative, the volume growth was approximately 15%, and the value growth was around 7%. Okay. So that's first part.
Okay.
Second part is, yes, there were some change in discount, upward change in discount, but that is mainly to remain competitive. So that's the second part. Third part, if you really look at the town classification wise, there are two ways to look at it. One, the local and upcountry towns. So upcountry town, the growth was definitely better than the local towns. And in terms of tire class wise, if we look at Tier 2, Tier 3 performance was very good. And Tier 1, which was performing heavily negative in the first quarter, they came closer to the base level, I would say. And in the metro, still, they were closer to the base level, but still not on the base level. So to that extent, the growth was driven by Tier 2, Tier 3, Tier 4 towns.
So, sir, Tier 1 and metros would, in normal times, contribute what percentage to your volume or top line?
So, generally for the market, it is about 30%. For us, it could be a little lower.
Okay. And this differential between volume and value is like 800 basis points. So, what is the biggest contributor? Is it higher discounts? Is it lower mix? Or is it MRP price cuts, which would be the biggest component out of this?
So, as I said, there were definitely some upward change in the discount. The second is, there are certain categories like, putty category, which had seen some better growth in the market.
Understood. So my second question is on the industrial portion. So how should we look at your industrial volume growth going ahead? Shall we basically say that it is going to be sort of more or less in line with the auto recovery, or that is not true because there are too many other moving parts?
No, you can say by and large it will be in line with the auto recovery.
Okay, sir. That's all from me. Thanks and all the best.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Sir, thanks and congrats on good set of numbers. My first question is on putty. You said that has grown faster. So wanted to understand as a percentage of sales, will it be say around 20% of your overall volume? And in terms of margins, gross margins, how will it be versus say the standalone, the deco margins, how will it be?
So, okay, the putty contribution is far lesser than what you're talking about. It is less than 10% to the total. And let me add, when I said putty, so one reason is the putty. The other reason is also when I was talking about the growth was supported by Tier 2 and Tier 3. So there you see, as I said, within the emulsion, you see more of a popular emulsion than, economy emulsion. So it's a little mix of those kind of things. And otherwise, as I said, the putty contribution is less.
And why are all paint companies seeing such a high growth in putty? So can putty, for example, from the current below 10%, can in the longer term become, say, 30% of your sales? Do you see that happening?
So it's like, our main focus continues to be on the main paint business. But what happens is we have putty, and putty, there are a lot of other players also. They are non-paint players. And sometimes the opportunity comes up in the market, and because it is being sold through the same channel, and whatever deficit happens because of whatever reasons, I think the growth gets added to the paint companies. But from our side, there's no special focus on the putty, and therefore we don't see that that kind of change can happen. But it's little up and down. In fact, if you look at last year, in fact, our putty growth was not so good, despite some of the players reported a very good growth in putty. But this year, yes, sometime when you try to become little competitive, because these are very competitive products. So if you try to become little competitive, you see some extra growth coming. But there's no specific focus. So therefore, that kind of change, what you're saying, is not going to be there.
So the second question is on adhesives. You said that's going to be a focus area. So I wanted to understand in terms of distribution, how do you scale up, and did you also evaluate the Huntsman acquisition which was done by Pidilite? And if no, what was the reason?
So I would not like to comment on the second question, but adhesive, okay, because we started the adhesive business sometime towards the end of last year. And as of now, what we are doing is that there is a existing business which is in the industrial segment, and we have started expanding in the retail segment. Retail, there are two channels. One is some part of our paint channel who also sell adhesives. That's something we started with. And the second main consumption happens at the plywood channel, where we started appointing distributors. So it's a gradual process. So we are appointing the distributors, and with the appointment of the distributors, we'll start reaching to the right counters, and that will enhance the growth.
And so last question, in terms of DIY, other paint companies are doing stuff. So if you could elaborate, how do you see DIY in India from a long-term perspective? I know in the next 2-3 years it will be small. And the related question, migrant labor is the worst behind in terms of painters. You are getting migrant labor. What's the sense you are picking up, especially in the big cities?
So migrant labor in the metro cities, you can still say some shortfall is there. But otherwise, in the tier 1, tier 2, tier 3, tier 4, as of now, there's no report of any kind of problem. I think whatever work or demand is there is enough labor available to take care of that. In the metros, and especially some metros, still there is some shortfall, which I think gradually it is recovering. And if the situation remains under control related to COVID, I think that very soon that problem should be over. But I don't see it as a major problem. Second question related to a DIY. DIY in India, if you see the rural market there, the DIY used to exist even earlier. People do painting on their own. But DIY from that perspective, what you're asking, I don't foresee that much of business coming in, because here the wall conditions are not so good. The wall conditions are bad, and therefore surface preparation is a very tedious task. And therefore the product in the DIY would be a kind of smaller product, which are like touch-up paints or which are like crack fillers, and those kind of things would be there. But if you look at painting DIY perspective, that looks difficult.
Thank you, sir. That's all from me, and all the best. Thanks.
Thanks.
Thank you. The next question is from the line of Jay Kumar Doshi from Kotak Institutional Equities. Please go ahead.
Hi, thanks for the opportunity. My question is on, what is the potential sort of upside you can see in profitability of auto coatings, given that now volumes are coming back. So essentially what I'm trying to understand is, what were your peak sales in auto coatings about maybe 2 years back before it started declining? If it was 100, are you at about 60, 65, 70 right now? And as this 65, 70 moves back closer to 100, what is the extent of improvement you generally see in operating leverage? And are there any discussions that you're having right now with auto OEMs, given that we are in a fairly benign RM cycle? So are they demanding any benefits of low RM pricing being to be passed on?
Okay. So, difficult to comment upon, as you were saying, that what base level, from what level it went up to, and then what level it can go up to. As of now, we can only comment that there is a recovery in demand, which all of us are hearing, and CM numbers are reporting. And industry experts are saying that at least this quarter they are hopeful of good recovery. After that, it is uncertain to see that what kind of demand would be there. So we have to wait and watch, because no one can say the situation has come back to completely normalcy. As of now, infections continued, numbers have come down, but the COVID continues. So it is not absolutely normal, and therefore one cannot say that the consumer sentiments have come absolutely to the normal level. It is just uptick in the demand is happening because people have somewhere reconciled and acclimatized with the fact that they have to live with this new normal, and that is how they are catching up. Related to our margins, in fact, we don't look at quarter to quarter margins. What we look at annual, always there is an attempt to see that, how do we do better than last year. But in digital business, it happens, because all of our customers also had faced problems in terms of, business was low. But, and therefore, when the business is low, we are doing a lot of cost reduction. Everybody tried to do a lot of cost reduction. And therefore, there is always a discussion in terms of what better pricing can be given. But, from our side also, it's more related to because the demand was low. So therefore, utilization is low. So your process cost goes up. So as of now, we have been trying to contain it, but it's a part of the business. I think, in the industrial business, that it is competitive, that every year that kind of discussion in terms of how the prices can be changed, that happens. And we try to manage in our own way, sometime by passing on some benefits, sometime, and compensating it with the cost reduction and all those things. So it goes in hand, because we have to create a win-win situation for our customer and for us as well.
Understood. Now, second question is that decorative demand has recovered. So, how should we think about A&P spends for rest of the year? And we've seen significant, operating leverage related improvement in margins in the current quarter. So, is that largely lower A&P spends as a percentage of sales, or for September quarter? And are you going to go back to a similar level as a percentage of sales, or do you think you will see some A&P efficiency over the next 1 or 2 years?
So, if you look at the past, in fact, last 3-4 years, we have been spending higher in A&P, and we had specific objective in our mind, taking our brand to a particular level. And we have been doing that. And obviously, that's not something which we intended to continue forever. So I think we have spent higher in 3-4 years' time, and therefore there is definitely a scope of efficiency in the A&P. This year, in fact, because first quarter or even July, August, the expenditure was very, very low because the opportunity to spend also was not there. So it's lower. But to an extent, that the brand needs it, activity-based budgeting, what we do in the marketing. To that extent, we'll definitely continue because marketing is very important. And for the short term, mid term, long term, so we'll continue on that. But yes, there is a scope of efficiency.
Right. So from a 3-year perspective, right now, if I were to look at your A&P and some assumption of decorative paints top line, it may be 7-8% of decorative sales, whereas peers are in that 4-5% range. So do you think 3 years from now, at a certain scale, that number can perhaps come down to 6% from maybe 7-8% as a percentage of decorative sales?
Shan, would you like to answer?
Do you have a target in mind that every year, 50 basis point margin improvement from A&P efficiency? Is that something?
No, it's not. No, so we don't look at the target in this case, because what happens is it all depends on that what kind of targets you're looking at for the top line. Also, the products what you are coming out. It's an activity-based thing. But as I said that, there was a different objective for last 3-4 years where we have been spending higher, and there is definitely a scope of efficiency there. But it's not that we are targeting that we are going to reduce, because sometimes, and it happens that you come up with some initiative which you believe that it is to be supported with the marketing activity, and therefore there would be a period where that you tend to increase it.
Actually, it is a need-based requirement, and we will continue to spend as and when it is required. So there's nothing that will be reducing or something like that. So definitely, as Anuj said, we'll be spending as the needed, and we'll continue doing that.
Understood. That's helpful. Thank you so much, and best wishes for the quarter.
Thank you. The next question is from the line of Prachi Kodikal from Bay Capital. Please go ahead.
Yeah, thank you. Good morning, sir. My question was related to your construction chemicals business. It is very helpful if you could just elaborate a little bit maybe on your distribution in this segment. What is your reach? And also, what are the end consumers? Are they mostly project sales or retail? So just need a little bit more information in this business segment, please.
So you know that we have taken over Perma, and that Perma construction chemical business was primarily a project business. So that was a project business, and the synergy or the scope of improvement what we saw is because we are strong in retail. Now what we have done in last 6 months or 1 year is that we have started expanding a relevant product range to the retail network. And overall we have a retail network of approximately 25,000 dealers, out of which 40-50% dealers at least has a potential to sell the construction chemical. So as of now, we have covered almost around 25-30% of our network. We have started selling construction chemical range, and that is how we are expanding.
Okay, got it. Thank you very much. That answers my question.
Thank you. The next question is from the line of Aditya Soman from Goldman Sachs. Please go ahead.
Hi, good morning. 2 questions from my end. So, firstly, you indicated that you have a network of about 25,000 dealers and you've seen some distribution expansion. So, has a lot of this distribution expansion come in smaller towns, or especially, say, tier 3-4 towns in the last couple of quarters?
So, first quarter, the expansion was almost nil, very less.
Correct.
And the second quarter, the expansion mainly has happened in tier 2, tier 3.
Okay, and would you quantify how many dealers you've added in the last? Or okay.
So percentage could be around 4-5%.
Okay, and would this be a part of the reason for the volume growth that we've seen, that you've had these incremental dealers, so there's been some sort of a push in volume through them as well?
Yeah, so to an extent you can attribute to it.
Correct. But I'm assuming that the sales per dealer for these incremental dealers will probably be lower than your system average, or would that assumption be wrong?
Yes.
That's okay. Okay, fair. And secondly, this trend that we are seeing of value growth lagging volume growth, I think you explained it, saying that part of it is because growth is coming in smaller towns, part of it is because putty sales that are higher. But is there a case that the higher end paints or higher end emulsions have better longevity, so the repainting cycle is wider? Is there any case to be made like that, or you think just don't think that's the case?
I don't understand your question.
Yeah, so in case of your higher end paints, right, say better quality emulsions, they last longer as well. So is the repainting cycle for the consumer longer in those type of paints, say compared with a basic paint, which I'm assuming you would need to get it repainted every 2 years?
So technically speaking, yes, but it depends on different segments of consumer, because we have a product where the life is 10 years and 20 years. But then people get bored with the same paint or same color just after 5 years. So even if the paint can survive for 10 years, people do go for a repainting 5 years. But technically you're right that as we look at the premium product, the repainting cycle can be longer.
Fair enough. No, thank you, sir. That was very helpful.
Thank you. The next question is from the line of Abhijit Kundu from Antique Stock Broking. Please go ahead.
Yeah, hi. Thanks for the opportunity. My first question was on your gross margin. What would be the outlook on your gross margin, given that there has been some amount of strengthening in raw material prices? In the first quarter, we saw a good bit of gross margin expansion, which reduced substantially in Q2. So going ahead, depending on the trend, what is the outlook there?
So difficult to comment on the trend. As I said, that the prices are firming up now, so we'll have to wait and watch. But it's always that no one can comment upon that how the actual trend would be, how we are going to see the prices in the future. But as of now, the trend is it's firming up because the demand is going up. So difficult to comment. But I think traditionally also you see that whenever this situation happens, either that if it goes to a level where the company need to pass on, it gets passed on, or otherwise it gets compensated with the internal initiatives.
Okay. And in case of waterproofing as well as putty, would it be right to say that you are below your revenue, contribution to revenue would be below the industry average? Below the average of the other two players. Would it be right to say that?
So you are saying waterproofing?
Waterproofing as well as putty.
So putty I can't say because I think it's whatever distribution any company has and the distribution sell all these products. So it may not be true. It would be equal to anybody else. Construction chemicals because I think we made an entry about a year back and this is the first year for us. So you can say that as of now it could be lower than, but we are catching.
Right. And in your industrial paints, now that you would be knowing the schedule of how the production of automobile manufacturers, you would be having a understanding of that. Would it be right to say that there is a fair probability of a positive growth in Q3? Q4 is difficult again, as you rightly said. But Q3 we can, there is a fair chance of a positive growth there, right?
I already commented, and because October numbers you are seeing that, some numbers have already come in and numbers are looking good. So September numbers were good, October numbers already reported by the analyst. It's good numbers. So I think for this quarter there is a positivity certainly.
Okay. So and also in decorative paints, the festive season being in this quarter now, there would be some amount of uptick or optimism from there as well, right? For decorative paints due to Diwali being in this quarter.
As of now, scenario is positive, but we always remain conscious. But scenario is positive.
And when we compare it to the previous year, festive quarter, not just the festive period versus festive period last year. How would have been there would be on a year-on-year basis, it could be lower, right? The sentiment, but still there is an improvement.
Yeah, improvement and the advantage, as I said, because this time Diwali is in the month of November.
Right. Last year it was in the previous quarter.
Can you hear me?
Yeah, I can hear you.
Okay. So I was saying that last year Diwali was in the month of October, and if I'm not wrong, I think it was the 20th of October, something like that.
Right.
And this time Diwali is on 14th of November. So you're getting a longer days. Typically in paint, what happens is because nowadays the monsoon continues till September. So if Diwali is in October, you just get a.
Hello.
That makes a positive impact on the sentiments also.
Right. Thanks. That's it from us.
Thank you. The next question is from the line of Shirish Pardesi from Centrum Broking. Please go ahead.
Hey, hi Anuj and Prashant. Good afternoon. Thanks for the opportunity and congratulations for excellent volume growth. I have few questions. You were just mentioning the tier 2 and tier 3 towns has done a significant growth. So what kind of contribution tier 2, tier 3 would have impact on our business?
So I think I answered in one of the question, around 30% from metro and tier 1, that is for the industry. For us, it is a little lower. So you can say the balance 70% come from the other class of towns.
Yeah. And would you be able to help me to understand, most of the players are now concentrating on economy, and you mentioned that popular and economy range is doing better. So if you just mentioned that putty is less than 10%, what would be the contributions from the whole economy, popular and the entire economy range in terms of emulsions in the overall pie? So
how we divide it is one is top coats and the ancillaries. So putty is a part of ancillaries. Primer, putty, those are ancillaries which are called undercoats or ancillaries. But within the top coat, and if you are specifically talking about emulsion, in the emulsion there are premium, popular and economy. and roughly industry contribution of premium would be around 20%, and 50% would be popular, and the balance would be economy.
Yeah. So that's what exactly I was asking. So what we have seen that last 7-8 quarters, most of the players are concentrating on economy segment, and obviously the strategy has gone right, the product has picked up very well, and we have seen the heightened demand in terms of volume growth. So my follow-up on that question is that in the economy segment, which particular segment is growing faster? Is that low-end economy is growing faster, and there is a uptrading which is happening from putty to December to emulsion? Is that the trend, or something else is happening? Why the growth is coming so higher?
So let me re-clarify. There is putty and distemper. Putty is a undercoat, distemper is a top coat. So putty has no relation, or there is no advancement for putty to distemper. What is happening is from distemper to economy emulsion, from economy to popular emulsion, and from popular emulsion to premium emulsion. So there is always that some percentage of people will upgrade from distemper to this. And when, obviously last 1 year there are economy emulsions which have been introduced, where the price point is very competitive. And therefore it is easier for the distemper user to upgrade to that emulsion, because the price difference is not so high, which used to be there earlier.
So if you can help me to understand, 2 questions on that. What is the difference between economy and premium emulsions from the price perspective, and is the margins are completely different, and it is explained by the price premium?
So economy would be in the range of 100 to 120 rupees a liter approximately, and your popular would be in the range of 150 to 180 rupees, and the premium would be 200 upwards. That is one. Second, when you say margins, I would say similar. Why I'm saying similar, because what happens is that when you go towards popular and premium, you also do a lot of marketing activities. So, otherwise the gross margins could be better in premium products or popular products. But when you consider your marketing investment into it, and if suppose one has to do at the EBITDA level, I think it would be similar range.
Okay. Just follow up on the, again, demand side. You mentioned in the opening remarks that there is a discounting, fair bit of the discounting which has happened in Q2. Could you please help me to understand if the discounting, say 10%, which has happened in the Q2, say September, is the discounting has gone up significantly in October month, or it's come down?
Very difficult to answer that, because discounting, one is the, increase what you do. The other is discounting changes, based on the product mix also. And I can only say that now because the product mix is becoming better, to that extent, the impact would be, different.
And this is what largely the industry is also following up?
Yeah, generally, there's a good player. There are good players in the industry, so everybody remain competitive.
Sure. Just last question on the new product, what you have put into the market. Would you be able to help me to understand what kind of contribution we have received in Q2 from the new products, like Virus Guard and other?
Yeah. It's too early to comment upon that, because Virus Guard also we introduced in the month of September. Too early to comment. I think we'll have to wait for another quarter or two, and then that would be the right time to comment.
Okay. Thank you, and all the best to you.
Thank you.
Thank you. The next question is from the line of Amit Purohit from InCred Capital. Please go ahead.
Yeah, thank you for the opportunity, sir, and congratulations on good set of numbers. So just on the gross margin, we are now close to our FY18 level of gross margin. So what I want to understand is, if you look at the auto segment, at the gross margin level, are we at almost at the normal range now, with no negotiations going on with respect to our clients in terms of price reduction or price increases? Is that a fair assumption?
No, that's not the assumption, because it's a part of business. In any business, or especially it is true in the OEM business, B2B business, it is always, irrespective of whatever the situation is, your discussion on the price always continues.
So, okay, let me put it differently. Are you facing any pressure or tailwinds which the OEM is not comfortable, or you are not comfortable, and hence some...
No, it's not like that. It's a healthy discussion. As I said, we have excellent relations with our customer. We understand their problem. They understand our problem. And there is a situation, as I said, because the demand was down, and therefore everyone understands that the process cost had a problem. Those things are there. So there is no unfair discussion. There are fair discussion, healthy discussions. And as I said, that in this business, obviously one has to ensure that there's a win-win situation. Sometimes you have to pass on the benefit. So ultimately the company works in terms of that how to keep customers satisfied, and then how do we still, for us, the endeavor is always to see that our margins are protected and, we do better than the last year. And therefore, internal and external combination of the initiatives, that's what we look at to see that what can we do and what we cannot do.
Okay. So actually, just to follow on two things on this. One is I'm asking this question because while the raw material prices were going up, we were in terms of negotiating with the OEMs to take price increases. Now that raw material prices have softened and you're saying that they are going to firm up again. So just wanted to check, FY18 was a normal kind of a year wherein our gross margins and the operating performance in industrial was not that impacted. So is it that from here on, whatever growth in industrial segment will come, that will provide an operating leverage and hence a margin benefit from that perspective rather than from gross margin expansion as far as industrial is concerned?
Very difficult to answer this question.
Okay. So are the FY18 level gross margin in the industrial segment same as now? Is that if that much, if you could?
Prashant, do you want to?
No, I'll just put it this way. See, in case of industrial, to answer, the questions that you asked, I'll just answer it like this. Whether in good times, bad times, there's always a discussion happening with the OEMs there's always a price negotiation happening. And they always ask for price reduction at any point of time. Every year many people say, I want 5%, 2%, 3%. So that's a negotiation which happens. It doesn't necessarily mean that always we give a price reduction. We do value engineering also. How we can improve we can give value addition to them, right? For example, I introduce a new product which gives them value benefit. For example, we can reduce their power cost. We can reduce their operating costs. So it's not only in terms of price reduction. It always is in terms of other benefits which give to the OEMs, where they see value coming on the table. And as a company, every year we do have a value added folder where we say this X party has got this benefit, that benefit. That's the way it happens. So if you to answer your question, it's like a give and take from both sides. Whenever there's a big steep increase in raw material price, they do give us a price increase. They may not exactly compensate what was the price increase, but here we have to do internal improvements, formulation changes, raw material substitution, how we protect our margins. So that's always from both sides we work together.
Yeah. Okay. Thanks a lot.
That's it.
Thank you. Thank you. Before we take the next question, we would like to remind our participants, you may press star and 1 to ask a question. The next question is from the line of Abhijit Kundu from Antique Stock Broking. Please go ahead.
Yeah, hi sir, thanks. My question was on the, typically if we look at the margins, in Q4 normally we have seen that the margins are relatively lower as compared to the rest of the year. Anything specific into it? Is it that industrial paint contribution is higher during that quarter, or rather decorative paint sales are lower during the quarter? I mean, contribution is lower during the quarter. What would be the reason for that? That's
I request Prashant to take this question.
I'll answer it. So generally, as I told you, the decorative part of the business is very high in Q2 and Q3, and Q4 the proportions goes down slightly. So that you see that margin difference in Q4.
Okay, that is the only reason. Okay. Got it. Thanks.
Thank you. Anyone who would like to ask a question, you may press star and 1.
Yeah, hi.
Yes, so you may go ahead.
Yeah, hi sir. Aniruddha here. So basically, our share of decorative business is improving. So just wanted to check with you, how do you see the share of decorative business inching upwards? So all these putty, primer, adhesive, etc., all are part of decoratives. Also, the new product launches that we see are happening aggressively in the decorative business itself. So, how do you see the share of this business in maybe after 3 years or 5 years time after? And also, how do you see the margins? So, in terms of the new product launches, like the product which is just launched, so is it a higher margin product compared to the existing products? Yeah, thanks.
So, Anirudh, we all this initiative related to distribution, what we spoke about, new product introduction, and it's a competitive industry, and we always keep ourselves on the toes. And all these initiatives are basically to see that how do we do better, and that's always the attempt, and that's always the effort which continues. And result, obviously, as it keep coming, we have to keep a watch on that. But from the company side, we always try that how do we do better. Second, your question in terms of margin, obviously, there is always a benchmark. So suppose if we are launching a product in emulsion, then we benchmark emulsion margin. If we are launching a product in some other category, we benchmark there and see that, my margins are protected or can be better. Or sometimes, even if it is lower, then what kind of volumes or business we can generate. And from that logic, we decide about the pricing and the margin.
Okay, sure, sir. Thanks.
Thank you. The next question from the line of Sandeep Mohta from B&K Securities. Please go ahead.
Yes, sir. Good morning. Couple of questions, sir. One is on the construction chemical. Where do you see this business over 3 years? Do you see what kind of growth do you see that can be sustained? And second, in terms of the economics of the construction chemical in terms of margins and balance sheet use, is it very similar to the rest of the business?
So construction chemical, business in terms of size in the country is about 20-25% of the paint industry, 25%, and the penetration is very low, and therefore the growth rate is higher than the paints or maybe the same level of paint, but probably higher than the paint. But there is a possibility going forward, the growth rate can be higher also. Earlier in the construction chemical, people used to, the consumption was based on if there is a problem, and therefore people apply construction chemical. Now it is proactive. So when we people got into it, paint companies got into it, and what we are educating our channel is that when you are selling paint, and if the construction chemical is applied along with that, it's like a safe option where that if this is done, the chances of dampness coming on the wall or the water leakages would go down. So to that extent, we do expect the expansion of this particular market, and we feel that the growth rates and in 3 years, 4 years time, the construction chemical will become a bigger business. And in terms of margin, it is similar to paints.
Okay, great. Thanks. And in terms of right now, you said that this time you have a longer time frame because of late Diwali. But are you seeing because of that more inventory in the dealer and distributor level at this? What is the secondary sales looking like? Is it very different from the primary, or any sense on that?
No, I think dealers are quite conscious of their inventory levels. So, there's no standard inventory level in the market, but every dealer, every market has their own standard. I think there's no change in that. People are maintaining their own standards of inventory levels. It's not that inventory is going up. It's not like that.
Great. Thank you very much, sir.
Thank you. The next question is from the line of Bismuth Naik from RW Investment Advisors. Please go ahead.
Morning, sir. So my question is on industrial. If you can share the volume growth in your industrial segment.
So industrial, as I said, that the Q2 was negative, and there's generally not much of difference in volume and value in industrial.
So my point is because durables and auto have done fairly well. I mean, they have recovered fairly well. So historically, is there a lag between their recovery and our recovery in volumes in the industrial segment mainly?
So, if you see the recovery, whatever numbers have come up, I was giving the mentioning of CM numbers also. The recovery was there in the month of September, and definitely there is some lag.
Okay. And the lag would be, 1 2 month or something?
1 month.
Okay. Thank you.
Thank you. The next question is from the line of Amnish Agarwal from Prabhudas Lilladher. Please go ahead.
Yeah. Hi, sir. Congrats on good numbers and thanks for the opportunity. So my question is regarding the non-auto industrials. If we look globally, non-auto industrial is a big segment, and it's not that so in India. Now, if you look at your portfolio, you have entered into many new segments in non-auto industrials. So what is your outlook on this, and what is basically going to be the future of non-auto industrial, and what sort of growth one should expect in these segments over the next few years?
Yes, Jason, would you like to take this question?
No, so I think Anuj, better you answer this.
Okay. So, non-auto, there are multi-part of that business. Powder coating is there, the high-performance coating is there. There are general industrial businesses there, and we are into entire range of non-auto businesses. And this has been our endeavor for past few years. In fact, recently, that we have entered the coil coating, we have entered the floor coating business. So new businesses, we are adding. There are very good technological products today in India. All this metro stations are coming up. The bullet train project is coming up. Mumbai Harbour Link is coming up. Coastal Road Link is coming up. And all these projects require a very different kind of product technologies. I'll tell you that there is one technology which is called C5, which is a fluoropolymer-based technology. It's a Japanese technology, and there's a life of about 30 years. It is applied on the steel, under the structures, and for the concrete also there are durable coatings like this. So our focus also has been there, and we have all these technologies available, and some of the this project which I was mentioning, we already got approved into this project. So there is a fair amount of concentration, but there we are looking at the differentiation, because a part of non-auto business also is a very competitive, market-based business where it's on the low margin business where we are not concentrating much. Our focus is in terms of technological, and today, like a lot of government projects also have started accepting a product, which has a longer life and functionality. Our focus remains there. In powder coating, we are market leader, and after we took over Marpol, in fact, our market share has further gone up. But there are good market of functional powder, where in fact in the past our share was relatively lower, and that has been a part of our consideration. A lot of products we have developed there, and now we are building up our market share there. One of the example I can give you a pipe coating, where we were little less available, and now that we are making entry into that. Even pipe coating, there is a powder business. In pipe coating, there is a liquid business also. In the liquid business, there are the existing players, and in the recent past, we got some approvals, and we hope that our business will see a good reflection of that going forward.
Okay, so globally, actually, the non-auto industrial is a big component, whereas in India it has not been so. So, what is the outlook over there? Is it likely to accelerate in terms of growth significantly over the coming few years?
Globally, if you see, even the decorative, in India, decorative is almost, I think, 70%, business. While globally it is not. Globally, industrial business is almost 50%. So that the Indian trend is different, and I don't see any major change going forward in this proportions.
Okay, sir. Thanks a lot.
Thank you. The next question is from the line of Ashish Kanodia from Ambit Capital. Please go ahead.
Yeah, thank you for taking my question, sir. So the first question is, in terms of your retail network, what is the biggest bottleneck to expand your network? Is it, the lack of depots, or, servicing time, or, brand recall? Where do you see the biggest bottleneck to expand your dealer network? And what is your internal target or ambition in terms of reach over the next 3 years?
So there's no bottleneck. I don't know bottleneck, because we have a very large infrastructure. As a company, we always believe, and that's why, in fact, we have multiple plants, and our number of sales offices would be about 100, Prashant?
Yeah.
So we have 100 offices. So that is not, from the servicing point of view, that's supposed to be a strength area. And generally what we do, we look at, increasing our network by around 10%, every year. Because at the end of the day, there is always a base level, and then there is always a market sector level. And you always, want to do better than that. Talking about that, whether we can expand the network, disproportionately in 1 year time, that's something does not happen, because in that situation, your entire logistic, your entire thing get disturbed. So we always, look at in terms of expanding our network, which is higher than the market rate, and generally we target about 10% increase.
Okay, got it. And just to understand, you talked about that the metro and tier 1 contribute 30% for market, but yours is a bit lower. So what percentage of your retail network is based out in tier 1 and metro cities?
So it will be the same proportion. As I said, generally the industry ratio is 30-70, and in terms of network also it would be similar.
Okay, got it. That's all from my side. Thank you.
Thank you. The next question is from the line of Varun Singh from IDBI Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, just wanted to understand that in decorative coatings, how would you break up the interior coating and exterior coating business for us? And in exterior coating, roughly what would be our market share? Will we be like kind of better than the competition?
So emulsions generally are in the range of 45 to 50% generally, and within that exterior is little higher, 55-45 you can say, exterior and interior. And the market share is generally like that as a company, whatever market share you have, it's product category wise, some point plus minus here or there, but market share we generally talk in totality, not every product level.
Okay, sure, sir. So that's it from my side. Thank you very much.
Thank you. The next question is from the line of Abhijit Kundu from Antique Stock Broking. Please go ahead.
Yeah, hi sir. My question was that you said that every year you have been expanding your retail reach by about 10%. So if we have to look at the last 3 to 4 years of expansion, and considering that if you have to look at the growth in decorative paints, would it be right to say that a good chunk of that growth, incremental growth, is coming from this, the retail expansion that you have done? Because primarily, understanding is that the retail expansion to a great extent happens in the smaller cities, and smaller cities have been growing at a higher rate on a structural basis. So, would it be right to say that a good chunk of the incremental growth is happening from the expansion that have 3 to 4 years?
So generally what happens is that obviously, one look at both. One that, getting a growth from your existing counter, then some growth coming from the new counters. And also what you do is that, you expand the network, and also sometime because of certain indisciplined reason, you also consolidate your network. So net numbers could be different. But just to answer your question, yes, a decent part of that business, not, some part of contribution is, comes from the new channel network, and some part come from the existing channel.
Okay, that's it for me. Thanks.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to the management for closing comments.
No, thanks a lot from our side. Thanks, and I think the quarter was good under the circumstances when the year started, and this COVID unexpected situation was there. There was a lot of uncertainty what is going to happen. But as we move forward, I think more and more clarity has come in, and to that extent, people used to anticipate that what is going to happen in paints, because whether people will allow painters to come inside. But I think last quarter has proved that generally the people are also restless to go out and open their wallet. And I think we are seeing a good trend, and we hope and pray that this COVID goes away as fast as possible. We pray for the mankind. We feel that everything goes well, and the business continue to grow and prosper. That's it from our side. Prashant and Jason, if you want to add something.
Hey, nothing. Thanks everyone. Thanks ICICI Securities for your efforts. Thank you so much.
Yeah, thanks to ICICI Securities.
So thank you everyone.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.